Hello, everyone, and thanks for joining us today. On behalf of the Environmental Finance Center Network, welcome to our online training today on financial benchmarking for small water systems, which is also going to include a demonstration of the Ohio Rates Dashboard. My name is Tess Clark. I'm joining you from the Syracuse University Environmental Finance Center. But before we get started, I just want to go through a couple logistics. So first, everyone is going to be on mute just to ensure audio quality. If you have a question, please type it into the GoToWebinar question dialog box anytime throughout the session. We'll be reserving questions for the end, but we'll also stop and periodically take questions if we see that there are a lot in the box. We will also be sending a follow-up email that includes a link to all the materials from today and any other information you may need. If you're interested in viewing the slides, you can just go to the handout section on your GoToWebinar control panel and download a copy of the PDF today. Now for a little bit of information about the 1 hour credit for today's webinar. The online training today is approved for 1 contact hour for licensed water and wastewater operators in Ohio. We do ask that you follow all the attendance procedures. You must be logged in with your name. You must attend the entire session. You need to respond to all of the polls every 15 minutes. And if for some reason you cannot answer a poll question, please reach out to us in the questions box and provide your response that way. Lastly, you must be screen attentive for 90% or more of the training. So please try to avoid navigating away from the webinar and keep this webinar open as your main screen. If you meet these requirements, you will receive a certificate of attendance from Syracuse University for completing this training. We will be sure to get those out within 30 days, and if you have any questions, just contact us at smallsystems@syr.edu. Now for a little bit of information about us. The Environmental Finance Center Network provides training and technical assistance to small public water systems in all U.S. states and territories to help local systems achieve their goals and stay in compliance with the Safe Drinking Water Act. And here you can see a little snapshot of all of the centers that make up our network. You can see that we really span across the continental US, so reach out to us if you are interested in working with us more. And now I'd like to hand things over to Shadi Eskoff. Shadi is the Research Director at the Environmental Finance Center at the University of North Carolina, Chapel Hill, UNC Chapel Hill. All right, Shadi, take it away.
Thank you very much, Tess, and thank you everybody for joining again. We had a session a couple of days ago, and today we'll cover slightly different topics. Hopefully you can see my screen. Tess, please let me know if it's not showing. But real quick, again, introduction for those of you who weren't on a couple of days ago. Again, my name is Shadi Eskoff. I'm with the Environmental Finance Center at UNC Chapel Hill, and our focus has really been on water, wastewater, and stormwater rates, financial planning, benchmarking, affordability, capital planning, asset management, essentially anything to do with financial management, and also on water system partnerships for local governments as well as non-governmental entities. And the link to our website is shown on the screen here, and we'll talk about some of the other resources that are available. I mentioned again that this is the second of 2 sessions. A couple of days ago, we did a session where we had funding programs representatives talk about funding that's available, low interest loans as well as grants that are available for small water systems to pay for capital projects, and talked a little bit about financial recovery from COVID. There are actually more to talk about, and there are probably more questions to address, and I invite you, if you have questions related to financial recovery from COVID, feel free to submit them here. If there's time to address some of those questions today, I'm happy to do that. If not, I'll always follow up with any of the leftover questions after this webinar to address them one-on-one with you to provide some direct advising. So if there's anything left over from 2 days ago, feel free to use this session to ask your questions too. Today, we're going to focus more on benchmarking rates and financial performance, which is an important topic because as you're setting rates and as you're considering how much your rates need to be, you need to be able to identify what the financial resiliency and the financial performance of your utility fund is. So where are you, and are you in good shape, or do you need to adjust some of the financial practices and revenues? And then that should then inform your rates. But when you're adjusting your rates, there's always questions about how those rates compare and how they benchmark to other utilities as well. So I'm going to cover both of those: financial performance benchmarking as well as rates benchmarking. And we've created a tool that's called the Ohio Water Wastewater Rates Dashboard, which will demonstrate how to use that for at least the rates benchmarking portion. I think I just covered what the agenda is. At any point, please submit your questions in the questions box. We'll be tracking those and answering them during this 1 hour session. Before I get started, I'd like to welcome and introduce Susan Schell, Manager Manager Engineering and Infrastructure from Division of Drinking and Groundwaters of Ohio EPA. Susan, I think, has some comments for everybody. So Susan, welcome.
Thank you. Yeah, just a couple items I just wanted to cover with everyone. This dashboard that EFC has put together for us for the state of Ohio is usually actual real data on rates for both water and wastewater systems. So we'd really like to encourage the systems to use this tool to help evaluate their financial capacity. This is a free tool. There's no need to pay any fees to use it, and it's a really nice tool to be able to use. We want to make sure that people understand that it's very important for rates to be sufficient to support the long-term sustainability of your water systems. Rates sometimes get approved in sort of a vacuum. You have a capital improvement project maybe that's coming up that you need to be able to fund, and you kind of just look at the very short-term rate necessaries to do that. But really, you need to be doing the planning for the long-term sustainability of water system, looking out 5, 10, 20 years out, and kind of get an idea of where the water system needs to go in the future. And that's part of our whole asset management program that, as you know, is required for all public water systems in Ohio. But some of the things that you need to keep in mind when you're looking at rates, and this tool can kind of help do some of that. Being able to fund a variety of different funds, enterprise funds, and that kind of thing, to be able to do things like fund and implement your capital improvement plan. You also want to make sure that you've got a reserve fund, that you're building for a reserve fund. So if you do have some emergencies that come up, you've got some funds available to replace maybe particularly most critical component in a water system should it fail. You've got that funding set aside, kind of a rainy day fund. If something catastrophic happens, you're not stuck between a rock and a hard place. You've got funds. You can access those funds and go ahead and make sure, get your repairs needed, maybe even replacements, and get your water system back up and running very, very quickly. We also want to make sure that you're looking at funds to retire debt, and that you need really a dedicated fund to do that for your water system. One of the things I think gets overlooked a lot of times is having a fund to do preventive maintenance. We get caught up in this cycle of just fixing things as they break, rather than being proactive and making sure that you're taking care of the assets that you do have and extending the life of them. We've found over the years that doing preventive maintenance is much cheaper than actually responding to emergencies. Basically, it costs anywhere from 6 to 10 times more to respond to an emergency, rather than fixing those things before they break, taking care of your assets, extending the life of them, and extending out those necessary capital improvements. So that kind of smooths out the rates that people would need to pay over time to pay for these sort of things. And then the last thing is, we want to make sure that you have a financial plan that's transparent and can be easily explained to the customer. They want to know where their bill money is going. Why are you doing this rate increase? What is it going to go towards? So I think taking all these things into consideration and using this dashboard that EFCN has put together for us. I think that can really help you do the planning piece and put the funds, set aside the funds, make sure the rates are appropriate to fund the things that you need to have happen. So I will turn it back over to Shadi, but that was my 50-cent tour of what we're looking for.
Thank you very much, Susan. That was actually quite a lot of really important tips here, and I'll try to call back on some of those as we go forward. I will mention one thing when you're talking about projecting rates, not just for next year, but kind of thinking long term, or 2, 3, 4, 5 years down the line. We actually have another tool in addition to the dashboard that we have that we'll be demonstrating here. There's another spreadsheet model that you could use to project your rates, how much revenue you'll be generating from your rates over the next 5 years, and how that compares to your expenses. So I'll mention that at the very end of this hour session today. So thank you. Let's oh, and then just here's my contact information again. If you're looking to reach me, feel free to call me or send me an email. Email is probably the best way to reach me, but if I don't respond, feel free to give me a call as well. So we'll get started, and before we do, we'll have one poll question launched. Tess, if you don't mind launching that one. We're going to be talking about financial sustainability and financial performance. I'd like to know, just in general, what does your system do in order to assess whether or not your system is financially sustainable? And you can select all that apply in this poll question here. So, and if you don't represent a water system, you can either send a message in the questions box saying doesn't apply to me, or you can select other. That's fine. Really, this is just to get a general sense of what water systems are doing to assess financial sustainability. So yeah, before you even start looking at rates going forward and what your performance needs to be going forward, you always need to start by seeing where you're coming from and what's the condition, and where are you at right now, and how can you adjust to correct for things going forward, or improve performance going forward. All right, we have a good response, but a few more seconds. All right, and if we miss this, if we close the poll and you don't respond, feel free to, again, submit your response in the questions box just so we can track who's responding to the questions. But right now, for those of you who did respond, many of you selected other, which might mean not applicable, but some of you might be doing some other things. We do see that a lot of you are saying that you compare your water rates to others, and that is one way to assess your water system's financial sustainability. An equal amount saying that you're basing it on how well you keep to your budget. And then a few of you are saying that you base it on the yearly, yearly audits or key financial performance indicators. And very few say whether or not you receive grants. So I'm glad to see that not many of you are relying on that second option, that you're relying to see whether or not you receive grants, and you're dependent on grants in order to be financially sustainable, because grants are highly competitive and they're very, very limited, and they're not going to be able to sustain everybody. So grants should not be the way that you measure success here, whether or not you receive grants or not. It's a great bonus if you get it, but shouldn't be something to be relied on. And I would also argue that comparing your water rates to others doesn't really necessarily give you a picture of whether or not your water system is financially sustainable, because you might have low rates, you might have high rates, but it's got nothing to do with the financial performance and whether your revenues and your expenses match up, and whether your revenues are going to be sufficient going forward to pay for all of your expenses. So if you're only comparing yourself to other systems, and if your main criteria is our rates need to be lower than everybody else, and that's the way that we determine whether or not we're doing well, it leads to some financial performance problems going forward as well. And I'll mention that later on. The budget question is a good one. I mean, obviously everybody should be tracking their budget and trying to keep to their budget. The key part here is, for financial sustainability, your budget needs to be very accurate and needs to be inclusive of all the types of expenses that you should be encumbering. So not just your operations and maintenance, but make sure that your budget includes everything you need for your capital projects, for your debt service, for past projects, as well as whatever you need going forward for future capital. So you need to be building up your reserves to be able to pay for future projects. And as long as your budget is fully comprehensive of all of your costs, then tracking and seeing how you're doing against your budget is a good way to measure financial sustainability. But that's the key part. Make sure your budget is comprehensive. All right, thank you. We can close that poll. So measuring financial performance, I'm going to be focusing on looking at key financial performance indicators. And I'm talking here assuming that most of you are local government utilities. If you are non-governmental, there may be some other reporting mechanisms that you can use to create similar types of metrics as well. But I can work with you.
Shadi, I hate to interrupt, but I think we might have a small issue with the screen froze on the poll. So I'm going to quickly show my screen and then change it back to you to just get the screen to stop being frozen.
Thank you for letting me know. All right, do you see my slide? It should be a table.
Yes, we're all set now.
Thank you. Okay, so for financial performance, here are some questions that you might want to ask yourselves. Is your water utility self-sufficient? Are you able to cover your debt service payments as well as your day-to-day operations and maintenance? If your customers stop paying their bills, or if they're late in paying their bills, we talked about customer arrearages and delinquencies a couple of days ago. How long can you continue to pay for operations before your money runs dry? Can your system meet its short-term obligations? These are all just important questions to ask as if you're the finance director, or if you're managing the system, you need to be able to answer these questions relatively quickly. And without having some kind of an indicator or some data behind all of these questions, it's really hard to assess and be able to say whether or not for sure your system is self-sufficient or can meet its short-term obligations, or how long you can continue to pay for operations. There are specific key financial performance indicators that you can calculate to answer these questions, and I'm showing them here on the screen. So I'll talk about each one of these in the next few slides. So there's operating ratios, debt service coverage ratio, days cash on hand, and then either quick or current ratio. And I'll talk about how you calculate all those. But before I get into that, we have a whiteboard video that explains these metrics as well as maybe one or two others in very simple terms. And I think it's a 10-minute video. It's a whiteboard video, so it's sort of like a cartoon type video, but it explains these metrics and why they're important and what do they mean. And these videos are developed not just to help us train utility operators and managers, but also elected officials and other folks who are responsible for water systems. It's a very simple type of video to watch. You'll have the PowerPoint slides. You can actually download the slides right now under the handouts section from the panel, but you'll also have an email later on that links you to the PowerPoint slides. So you can always click on this link and watch the video or share it with your governing board or staff. Where do you find the data to calculate this? All right, well, with local governments, everybody's required to create an audited financial statement every year at the end of the fiscal year. So all the local governments have a report that provides a year-long worth of data that you could analyze and create these metrics from. The non-governmental systems don't have the same audited financial statements that governmental systems have to create, but you create similar things. You create balance sheets, you create shareholder reports, you provide reports to the Utilities Commission, and so forth. So there are other reporting reports that you might be able to dip into to calculate these metrics that I'll be mentioning. But all the metrics I'll be mentioning here is really coming from audited financial statements from local governments. So I'm going to skip this poll because we just asked one. But for audited financial statements, you've got three different, well, there are many sections in the audits, and there are three particular statements that you should look at in order to get the data to calculate these metrics. The statement of net position, statement of revenues, expenses, and changes in net position, and then statement of cash flows. This is not an accounting class. It's not, I'm not going to talk about all the GASB requirements here. I'm just going to mention that there's a report, audited financial statement that every local government has that has each one of these statements. It follows specific standards, national standards. So everybody's got this kind of data, and you should look at the data. It's usually created by the accountants and it's audited by another firm. But if you haven't looked at those statements, I would encourage you to do so, because they provide a lot of really good information for your system. And it's how you can calculate some of these metrics that I'm going to mention. So let's start with operating ratio. This one is taking a look at total operating revenues and dividing it by total operating expenses. If you think about that, you want to make sure, of course, that your revenues exceeds your expenses. So you want a ratio of greater than 1. There are 2 ways to calculate this metric, because operating expenses in the audits includes depreciation. What it includes is all the expenses that you have for operations and maintenance, as well as depreciation. It doesn't include debt service. It doesn't include things that you need, for future capital expenses. It's just looking at operations and maintenance, and depreciation is included. So when you calculate this ratio with depreciation included, you're asking yourself whether or not the revenues you're collecting from your customers was enough to cover operations and maintenance and depreciation. Now, if you exclude depreciation, you're just asking whether or not revenues are enough for operations and maintenance. Why you would want to include depreciation is because at least adding depreciation includes some measure of the amount of money that you might need to generate to save ahead of having to replace those assets that are deteriorating over time. If you have a capital improvement plan, and if you have some more sophisticated method of determining all the costs that you need going forward, you should be budgeting for all of those costs. If your budget does not include a capital improvement plan, then at least you should be budgeting for depreciation in order to save some money going forward to pay for replacement of assets. This goes back to something that Susan mentioned earlier. Now, depreciation alone is not going to be enough, because future capital costs are always much more expensive than previous costs that you're depreciating on. So even with depreciation, you want to see this ratio to be more than 1. You want it to be higher than 1, maybe a 1.1 or 1.2, because you want to account for additional cost increases going forward. So how you will calculate it, you would look at your statement of revenues, expenses, and changes in net assets, and you would look at your water and sewer funds, and it spells out total operating revenues and total operating expenses. So you would take operating revenues divided by operating expenses, and you get your ratio. So for this example, their expenses exceeded their revenues, so the ratio is less than 1, which is a bad thing. If you exclude depreciation, then you would take, you can see that depreciation, I don't know if you can see my mouse, but depreciation is one of the line items under operating expenses. So you just need to take the total operating expenses, subtract out depreciation, and calculate the denominator that way, and calculate what the ratio is. So in this case, this system has enough revenues to pay for operations and maintenance, but not enough to pay for operations, maintenance, and depreciation. The next metric is debt service coverage ratio. For those of you who have debt, you have principal and interest payments that you have to pay. And the bond covenants or the funding programs, when they provide the loan to you, will usually specify that you need to generate a specific debt service coverage ratio. They want to make sure that your revenues are enough to cover your operations and maintenance and your principal and interest payments, and also a little bit extra to put in as security for the loan. So that way, if you end up with 1 year of lower than expected revenues, you have some security already built to be able to pay that principal interest, because they want to make sure that they get paid. So you calculate this from this formula. You take your operating revenues, you take your you subtract out the operating expenses, excluding depreciation, and you divide it by principal and interest payments. Usually, you want a 1.2 or higher metric for this one. And you get this data from the statement of cash flows. Well, the first 2 numbers you've already gotten from the previous statement, and then principal and interest you'll see from the statement of cash flows as two line items. You add them together, put them in the denominator, and you calculate the ratio. 0.89 is not a really good sign for Mayberry, because what that means is if it's less than 1, it means that they had operating revenues that paid for operations and maintenance, but not enough to pay debt service, let alone to add the extra security that's required. Days cash on hand is looking at the question of what happens if my customers stop paying their bills. Everyone stops paying their bills. How much reserves do we have that we can continue to use to pay for operations and maintenance before we run out of money? So how much do we have in our bank account, essentially? And you calculate that by looking at your unrestricted cash. So the cash that you have that's savings, that's not restricted either to pay for loans or for some other designated purpose. And then dividing it by an average daily operations and maintenance value. For this one, I'm gonna actually ask the poll. I'd like to know, in general, I mean, what would be a good target for you? Or what is a good target, minimum target for days cash on hand? How many days of, we should launch the poll on this one. I think it's the 4th poll test. So do you want to have, thank you, do you want to have enough cash available at all times that you can pay for 30 days of operations and maintenance without any incoming cash? Or do you want to have a minimum of 2 years worth of savings in your fund balance? So what is a good minimum target here? And I'm curious to know what your responses are, because really there is no one metric. Unlike the other 2 metrics, there's not an easy, like, okay, it needs to be a 1.0 or 1.2. This one really does depend on what the elected officials and what the governing board decides is a good metric here. But from a utilities perspective, obviously the higher this number, the more security you get. But it also means that you're sitting in on a lot of cash as well. It means that you have to generate that cash from your customer base. So there's a trade-off between having all that security and a high reserve account, and also how much you want to be charging your customers. So just curious what your response is to this. That's good. We can probably share the response here. Thank you. So most of you said 180 days. You'd like to have at least 6 months worth of cash available in your account. And some of you are saying at least a year, and some of you are saying at least 3 months. So you can see right there, like there's a variety of responses here. And again, there's no right answer or wrong answer here. It's really a comfort level. I would say a wrong answer will be anything less than at least 1 billing cycle, preferably even less than 3 billing cycles will be too little, because you definitely don't want to run into cash flow issues. But I see a lot of utilities aiming for at least 6 months, and now I'm seeing a lot more utilities looking for a 1 year. Because if you think about COVID, no one expected COVID. For those utilities that had at least a year's worth of reserves in their accounts, they weren't as panicked about the reductions in revenues because they had a high reserve that could accommodate dips in revenues. If you only had 6 months, you might be panicking now, because we're a little bit more than 6 months into COVID. So the more security you have, the better. But again, it also means that your rates have to be higher. All right, thank you. We can close this poll. And the last mention, and I'm showing you here how to calculate it. It's the unrestricted cash is actually showing up in the statement of net assets as a current asset. It's usually a line item that talks about cash. So you show how much cash you have, and divided by an average daily operating expenses excluding depreciation. And for Mayberry, it's 107 days. So they can operate under, with no revenues coming in. They continue to pay on average about 107 days before their cash runs out. Current ratio is looking at how much you've got available in terms of current revenues and current assets. So assets that you can liquidate very quickly to pay for current liabilities. And you want that ratio obviously to at least be higher than 1. But the issue with this metric is that it varies day to day. And if you look at the audited financial statement, you're only looking at it for 1 day of the year. That's usually the last day of the fiscal year. But it gives you a sense of whether or not you had a lot of liabilities, or you had a lot of you had enough current assets to cover all of those liabilities. And I won't go into too much detail of how to calculate this, and you've got the ratios here and you've got the PowerPoint slides. You can ask me questions later. But this one's a better metric where you're tracking it over time as opposed to just looking at it at one time in a year. So I would suggest calculating this kind of metric either every month, or if you've got multiple years worth of financial statements, looking at the trends over time. All right, I'm going to skip that poll. It's actually a quick quiz because the answer is actually right here. Important thing to do with financial performance benchmarking. And I just shared with you 4 metrics. 5 if you include operating ratio, can be calculated in 2 different ways. Like I said, if you look at your latest audited statements, you're only looking at the metrics for this last fiscal year, or even in the case of current ratio or days cash on hand, it's the last day of the last fiscal year. The power of benchmarking really comes into play when you're tracking over time, more so than just looking at one time in a year and whether or not you're above and below a specific threshold. Because you could be above a certain threshold. I mean, take a look at the operating ratio in that first graph. That system has an operating ratio that's above 1.0, so they might have felt fine. And they met their target. They had enough revenues to cover their expenses. But if you look at the trend over the past 5 years leading to that one point, you can see that ratio is declining over time. So unless something changes going forward, the trend is showing that they might not meet that target next year. So that's the benefit of looking at trends. And I would always recommend looking at at least 5 years of your financial statements and calculating these trends, because that way it gives you a sense of whether or not your finances are either improving or not. And if they're not, then you have enough time to correct for that and to adjust your rates or to adjust your expenses to make sure that you're in okay shape or good shape next year as well. We have a tool to help you do that. So we have a spreadsheet model, Excel file that you can download, where it walks you through step by step how to read your financial statement, where to get the numbers. You put in what the numbers are in literally just copy and paste the numbers into the spreadsheet model, and it calculates the ratios and these graphs automatically for you. So that's a tool that you can just download and use on your own, or you can ask us and we can work with you one-on-one on it. And this is what it looks like. All of these numbers that you see in the top top table are just numbers being copied and pasted straight from your audited statements. The last thing I'll mention is, is that we just talked about benchmarking financial performance and determining whether or not you're performing, your enterprise fund is performing adequately, either in this last fiscal year or over time through trends. Important part here is to also consider creating specific targets for yourself. And this is something that would involve both the staff as well as the governing board, to come up with a policy that says we want to be tracking our financial performance targets, our performance metrics, and to set a minimum target. We want to have a document that says that at the end of the fiscal year, we want to show that our operating ratio is above 1.2. We want to show that our debt service coverage ratio is above whatever, 1.5. We want to have a minimum days cash on hand of 365 days. Some kind of a target, so that when you are assessing these every year, you could be communicating with your governing board whether or not you're meeting these targets. And these targets can then help you communicate with your board about the need to adjust your rates. So if you're not meeting those targets that the board has already approved in the past, then you can make the argument for, look, our finances are not where you've wanted us to make sure that they are. Or where they're supposed to be, so we need to be adjusting our rates. So it's a good communication tool, it's a good way to check, and it's a good way to make your rate case to your board as well. And we had a whole webinar that talked about setting financial targets that you can, by clicking on this link, you can watch the recording of that. So if you're interested to know what other utilities have done as far as setting specific targets, take a look at that. And I've got, here are some ideas of, types of examples of financial targets that some systems have put together. Okay, so I'm going to shift now and talk about benchmarking rates. A lot of this, we've just talked about benchmarking financial performance and seeing whether or not your enterprise fund is performing adequately, and the importance of setting trends, or to analyze the trends and to set targets for your system. Now let's talk about benchmarking rates, which, as you answered in the first poll, is one thing that a lot of you currently do in terms of assessing financial performance, but also I'm imagining it's partly because you're communicating with your board and with possibly with your customers about how the rates that you're charging compare to others across the state or in your region. So I'm going to ask this poll question, if you don't mind test launching this one, just a true or false. Is it, true or false, it is important for our water system to compare our rates to other systems' rates. And I'm going to emphasize here the important part, not that you do it, but that you feel like it's important. It's either important to you as the utility operator or finance director or manager of the system, or important to the governing board. Somebody thinks that it's important for you to be able to compare what your rates are to other systems' rates. We'll give you a few seconds here, and if you don't represent a water system here, you can probably answer not applicable, so we can keep track. And while you're answering this, I'll remind everybody, if you have any questions, either about financial performance benchmarking or rates benchmarking, please submit them into the questions box. All right, thank you. We can take a look. So more of you said false to this, and some of you said true. So that's good. So again, I emphasize the important part, and many of you said that it's not that important. You might be doing it, you might be comparing rates, you might be asked to compare rates, but you might feel like it's not an important task because for whatever reason. Some of you say that it is true, that it's important to compare your rates to others. Now, I'm not going to tell you whether or not it should or should not be important. I'll just mention some of the things to keep to be aware of when you are benchmarking, comparing rates. So thank you. We can close that poll. One thing to keep in mind, again, like I mentioned before, whether or not you have high rates or low rates compared to others really does not say anything about your system's financial performance, which is better measured through the financial performance metrics than they are by whether or not your rates are compared to others are high or low. But a reason why you might be comparing rates, there may be a couple of reasons. One is you might be concerned about affordability and you want to make sure that your rates don't seem to be too high. Now for that, there are other metrics besides whether or not your rates are higher or lower than neighboring rates. There are other ways to assess affordability of your rates. So there are other metrics to use there. Another reason is economic development. So we know that from some communities, governing boards are concerned about charging rates in such a way that small businesses or even large businesses might choose to locate their businesses some other town because their rates are lower. So that might be another reason for comparing rates. But again, if you're basing your decisions on how much you're charging your customers based on how much other utilities are charging, that might not give you the full picture. It won't give you the rates that you need to charge to make sure that your individual system is financially sustainable going forward. So just be aware of that. We did a survey a few years ago, 2014. That was a national survey where we actually surveyed water systems as well as elected officials to see how the communication was going between the system and elected officials when it comes to requesting a rate increase. We asked, what was being shared and what the elected officials wanted to hear, and what was important and what was not important. I'll just share some insight into kind of what the responses were. So out of 1,400 utilities that responded, 94% said that they communicated to their elected officials what the utility's financial condition was. So that's good. So all these financial performance metrics I mentioned in some fashion was being communicated. 74% communicated what neighboring utilities are charging. So there's some comparison of their rates to neighboring utilities, or 58% compared to similar size utilities. So maybe not your neighbors, but other similar size utilities elsewhere in the state. And that this information, all this information we talked about, was judged by the staff to be either very or somewhat useful. So it's not just in Ohio, but in other states across the country where utilities do compare their rates to their neighbors and consider that to be somewhat or very useful information for their elected officials. Let's skip that point. Now, the elected officials said, this is what they said. They cared about, they wanted to know what the long-term impact of the utility's financial condition is. They considered that to be very important or important. Half of them cared about what other neighboring utilities are charging or similar size utilities are charging. And a lot of them cared about the affordability of the rates to the residential customers. So again, some elected officials care about this, others don't, but they care more about financial performance and affordability of rates, which is a separate way of benchmarking. We do know that those systems that do compare rates, this is still some things that we see on websites where they would provide a news flash or kind of boast to the media that they've got some of the lowest rates either in the region or in the state. And that's a relatively common practice. Maybe we're seeing it a little bit less these days than we had in the past. But I think that there's always this pressure to charge and to talk to your customers and let them know that you're charging low rates or lower rates than everywhere else. And it's typically done, and how rates comparisons have been typically handled in the past is this kind of common way where either you as a utility or an agency like Ohio EPA or some other organization, sometimes consulting firms, would do a survey of either neighboring towns or towns of similar size and would find out what the bill is at a certain consumption point, and then create a graph or create a table that shows here's my utility, this is how much we're charging, and here's everybody else and how much they're charging, and communicate that to the elected officials. Now, in doing so, there's always pressure to, if you're only comparing the rates, there's always pressure to be on the low side of this graph. So if you're the utility manager, you're providing this to your elected officials, you're going to want to explain why you're not, and this is from North Carolina, why you're not charging the same as town of Aberdeen, and you're charging instead something like closer to the city of Sanford or town of Cameron. So there's always pressure to, when you do this benchmarking, to always want to be on the low side. It doesn't communicate the full picture. So that's part of the problem with benchmarking this particular way, where you're only comparing rates, is that you're not looking at the full picture besides the rate. So what is the financial condition of the system, the customer's ability to pay, and also ignores other types of metrics that you could take a look at, like price signals and utility policies and other types of performance indicators that you could measure. It also, by looking at one consumption point, you might not get the full picture. If you were able to compare other consumption points too, you might see that the rankings of systems completely change. So you might have a high base charge and low volumetric rates. And if you compare at low volumes versus high volumes, you'd rank very differently than a system that would have low base charge and high volumetric. And it's also really hard to identify which systems to compare yourself to. So that's one of the benefits of the dashboard and the Ohio EPA survey, is that it provides a lot of information for a lot of systems. So that way there's a lot of different better ways of choosing who you're being compared to than if you tried to do your own survey and only contacted 5 towns and got their rates. So before I introduce the dashboard, I just want to mention that, again, this is coming from the Ohio EPA's water and wastewater rates survey. And this is a survey, it's probably, I don't know of another state that has had a survey that's this long standing. Ohio's has been going on since the 1980s. So kudos to Ohio EPA for keeping that up. but there's annual rate surveys in 2018, which is the latest rates data that's available, and that's what's in the dashboard right now. The 2018 rates came from about 440-ish, 45 utilities across the state, which is about 70% response rate, which is fantastic. And Ohio EPA puts together the report, which has some summary statistics at the top, and then it lists tables of every single utility's rates within the survey. And it's computed for one consumption point, which is 77.56 gallons per month. That equates to what was 85 gallons per capita per day, which I guess was the starting point of the surveys, a few years back. So it's maintained so they can do a trend analysis and see how your rates are increasing over time and how other utilities' rates are increasing over time for the same consumption point. Speaking of that, these are two screenshots of the report. Again, this is 2018 rates, but you can see that the rates over time have been going up for both water and wastewater faster than the rate of inflation. So that gap between what the rates are and inflation is growing over time. And that's just showing you that your water and sewer rates are going up faster than inflation, which is actually very common in other states too. I did the exact same graph here for North Carolina just a few hours ago on a different webinar, and it was almost identical as far as the gap between inflation and rates. It's common for utilities. All right, so I'm going to switch over and now demonstrate the dashboard. So we took all the data that Ohio EPA put together in the survey, and we merged it with additional information. So we merged it with census data for every one of the local communities, and we merge it with CIDWIS data. So what basically the number of water connections and service populations, as well as whether it's a surface water system or groundwater system. We merge all that together, and we brought in from USGS. They provide, every 5 years, they do a survey, and they estimate the average consumption of water by public utilities by county. So we brought that in as well, and we put all this information together into a tool that you could use as an interactive tool. I'm going to switch over to right now, that you can use to look at all the data in one shot. So the way to find this, first of all, I should say that Ohio EPA's, I think it's currently right now going through a 2019 survey. So please respond to that. The dashboard is not yet on Ohio EPA's webpage, but I think Susan mentioned that they're looking into putting that link there. So to find this dashboard, one way is to just do a Bing search or a Google search, look for Ohio Water and Wastewater Rates Dashboard, and it will take you there. Or you can go to our website, which is provided in the link. And if you go to Resources, Utility Financial Sustainability and Rates Dashboards, you come to this page, you click on Ohio, and it takes you to the dashboard, which looks like this. So the dashboard, I'm gonna hit OK. I'm gonna try to squeeze, I'm gonna slide it down just so you can see, and zoom in so you can see better. You start off by selecting at the very top what utility you are. So I'm just gonna randomly pick Barnesville. All right, so here's Barnesville. What you see on the dashboard are several things. One is a map of Ohio and where the system is. Every blue dot that you see on this map is a water system that you're comparing your rates to. All the light blue dots are those that are maybe, right now we're looking at water bills, but they're a wastewater only system. So depending on which type of bill you're comparing to, you'll see dark blue dots or light blue dots. Dark blue dots are the systems that you're being compared to. And then we've got dials on the right-hand side. So the main dial here, the first dial is the bill comparison. So what does Barnesville's water bill at 77.56 gallons a month would be? They're charging $48.50. Compared to all these other dark blue dots, they're right here. All right, what does that mean? So what we're showing here for the bill comparison dial is hopefully you see a yellow section here, a light green section, dark green, light green, yellow again. This middle dark green section shows the middle 50% of all of these dark blue dots. So if you're in this dark green area, you're charging somewhere within, somewhere that's in the middle majority of all the other systems. If you're in this light yellow area on the left, you're charging less than 90% of all of the other systems in the state. That's being compared in this map. If you're in this the second yellow area in the high side, then you're charging more than 90% of all the other systems that you're being compared to. So right now, one thing that we're doing here with this benchmarking tool, and we've got these dashboards for multiple states. In Ohio, this is the first time we've done it since, I think, 2013. What we're trying to show here is that when you're comparing rates, having the lowest rate is actually not the target. You shouldn't be aiming to be in the lowest 10%, unless it provides enough revenue for all the expenses that you have. If that's the case, that's great. But if you're charging lower than 90% of the other systems, then it's probably time to take a look at your finances and make sure that you're budgeting for not just your operations and maintenance, but also all of your capital projects, and that you have enough revenues coming in to pay for all of your projects, for all of your needs. So that's why it's yellow here. It doesn't mean it's a bad thing to be on the low side, or even a bad thing to be on the high side. It just means that if you're lower than 90% or higher than 90%, take a look and see whether your finances justifies why you're charging those rates. And if not, then maybe there's obviously room to adjust where you'll be getting back to closer to what other utilities in the state are doing. So that's the bill comparison dial. The next dial I'll talk about is the one actually in the bottom right, which is the affordability dial. There are a lot of ways to assess affordability, one of which is this dial. And it's not, I'll be very honest, it's not my favorite dial. It's actually, it's the most commonly used metric to measure affordability, but it's also the most misunderstood. And it's not the most comprehensive. It's the percent MHI, percent median household income. What this is doing is it's looking at that $48.50 and saying if a customer is using this same consumption for 12 months in the year, you multiply this bill by 12, how does that compare to the median income, median household income in your community? So again, we've matched every one of these towns. So Barnesville, we've matched them to the city of Barnesville's census data, and we took the latest census income data, and we found that the median income was actually, if you click on the question mark, you get more information, explanation on each of these dials, and extra information. So for Barnesville, we're comparing them to, well, it's the city of Barnesville's income level, and their median household income back in 2018 was $36,000 and 590 cents. So half the households in the city made more than 36,000 and half made less than 36,000. Well, 12 months worth of this bill, of this water bill, amounts to 1.59% of that median household income. Whether or not that's high or low is really not something that's being dictated by either the other external organizations, state or federal government. It really should be something that's assessed at the local level, so by the elected officials and by you as a utility. But there are some metrics that you might see elsewhere. So with Ohio EPA, some of the funding programs require a specific percent MHI threshold that you have to have at least higher than, I forgot the percentages, but higher than a specific percentage of percent MHI in order to be eligible for grants or subsidized loans and funds. That's looking at eligibility for grants and funding, and that's why they have a specific threshold, but it's not an assessment of affordability at the community, at the local level, because you need to assess affordability. Now, again, there are other metrics to measure affordability. This is the only one that you can calculate very quickly, because as long as you have the income level and you have the bill, then it's an easy calculation. So that's why it's on the dashboard and it's most commonly used. But if you're looking to measure affordability, I've got another tool that will provide, I think, 6 or 7 different metrics to help you assess affordability in different ways, and that's probably more comprehensive. And then the third dial here, I see some questions coming in, so I'm going to pause after I explain this third dial, is showing from the USGS what the average per capita consumption is per month for the county, not for your utility. So it's not specific to utility, it's estimated at the county level. So if for this county right here, it's showing that back in 2015, the average per person per month usage was about 1,300 gallons. So if you divide it by 30, you'll get the per capita per day numbers. And again, if you click on any of these question marks, you get more information, explanation about each of these dials and what the colors mean and what the metrics mean. This dial here is shaded out because we used to have cost recovery ratios, but unfortunately, we didn't have that data to merge in this time around for this dashboard. So in most states, when we have a dashboard, we always include a cost recovery ratio, which shows the operating ratio with depreciation. So going back to the first part of the webinar. So it's an important part. Even when you're using dashboard, I would suggest adding to it all the financial performance metrics along with it, because we don't have access to that data, so we couldn't add it to the dashboard, but you've got it from your audited statement. So I would suggest looking at those numbers as well as you're using this tool. You can look at your water bill, your sewer bill, or water and sewer combined. And you can compare yourself not just to all the systems in the state, but if you select, I want to compare just the same system or systems with the same number of accounts, automatically it filters to the subset of utilities of similar size, whether it's number of accounts or specifically number of water accounts, which might be slightly different from other sources. Ownership type, so whether you're a municipality or a district or a county. You can compare to communities that have same level of customer income, so the same median household income ranges. You can compare to other systems in your watershed or within 50 miles or 100 miles radius. So neighboring towns. And we will only show you these dials if you have at least 10 rate structures to be compared to. If it's less than 10, usually we gray out the dials. The last thing is you can raise your rates and see what that does to both your bill comparison as well as your median affordability. So in this case, I just slid it up to raising rates by 30%. That might be a little high. Let's say that you raise your rates by 10%. You can see, well, hopefully you can see that there's a light area, light line there where the original bill was, and where the new bill is where the needle is right now. So if I move back to 0, you'll see that the needle moves back to where it was, and you raise it up to 10%, this is where you would be. And you can see the same thing happen with the affordability dial too. So for Barnesville, water and sewer combined, they would go up from 4% MHI to 4.4% MHI. Now, this is not to be used as a way to do your budgeting and your rate setting. This is just an easy and quick way to get a gut feeling for what happens if we raise rates by 5–10%. Where would that take us as far as our comparisons? But you still need to do your rate analysis before you set your rates going forward. All right, I'll pause here and answer any questions that might have come in. So, Tess, do we have anything to respond to?
Yeah, we have a question about the utilities surveyed in the dashboard. What is the typical population that they're serving? Do you know if the number of people served, what the demographics are like for this population for the dashboard utilities you surveyed?
Yeah, so we did not survey. This is, again, the survey coming from the Ohio EPA, and I believe that they survey all local governments and all districts in the state. Susan, if you want to add anything to that.
Yeah, the survey went out to all of our community water systems.
Thank you. Yeah, so it will include the largest as well as the smallest ones here. And I think we do show that. If I do this real quick, so I didn't have time to go through the characteristics. If you click on the characteristics tab, you just get some information about this particular community or this utility. So here's Barnesville, and here's Barnesville's information, either from CIDWIS or their census information. So you can see how their property rates compares to others across the state or others in the survey. But overall, let's see the estimated number. So the median, half of the utilities in the survey had about 1,500 connections. So you have a lot of small systems here. If half of them are less than 1,500 connections, that's a lot of really small systems, but obviously also all the large systems are included in the survey too. Thank you. Are there any other questions, Tess?
That's it for now.
All right, thank you. If folks have any more questions, please submit them. I'm basically at the end of the slides. I will mention that, so I've got in the slides, I actually have some screenshots of each of these, basically what I just went through, and it explains or points things out so you can use this PowerPoint slides to remember what we talked about. We're also recording the webinar, so you'll have access to the recording too. I'll finish up by saying that we've got on the EFC network website, we've got a lot of tools, and some of them I've mentioned. If you go on the tool, if you go on that website, you can download any of these tools, or just click on any of these links directly, and it'll provide you these tools. But this is the rates analysis model. This is the one that will help you project your revenues over the next 5 years, and you can change your rates over the next 5 years to make sure that the revenues meet your expenses. That's a really great tool to help you with your cash flow as well as your rate setting when you're looking at your rates going forward. So I would recommend looking at this one, and we can work with small systems below 10,000 people using this tool directly, one-on-one. I mentioned this one last time, so I won't talk about it again today, but I wanted to bring up this one, which is the affordability assessment tool. So if you are interested in looking at affordability and you don't want to just look at percent MHI, but you want to include other types of metrics, there's a spreadsheet tool that walks you through 5 or 6 different metrics and helps you assess affordability of your rates to your residential customer base, all based on your customer base. So it's got a lot of census data as well as your rates data combined. We can again work with you one-on-one on this tool. There are some other tools that we created for COVID that I talked about a couple of days ago. And then the dashboard is also on this website too. So with the EFC network website, if you click on resources and click on map of water and wastewater rates dashboards, you'll see an updated map where you can click on the state and it will show you the Ohio dashboard. And then we've got a blog that you can subscribe to as well. But I'll pause. Actually, let's launch the last poll if you don't mind. And I'll ask if there are any other questions for me to answer. But this last poll is asking if there's any small water system below 10,000 people that would like us to contact. You'd like us to contact you to schedule a time to do some advising or direct assistance. No charge to you. It's covered under the EPA cooperative agreements we have with US EPA. If you're interested, we'll follow up with you. We can either work with you and do the rates comparison through the dashboard and walk you through understanding how you look on the dashboard and what it means for your financial management. We can work with you and do the financial performance benchmarking or talk about setting specific targets for your system that would make sense for your system. We can look at affordability of your rates or help you look at your rates in general and whether your rates are sufficient going forward. So any of these services we can provide for small systems. So if you're interested, just say yes. We'll follow up with you after this webinar. Are there any questions, Tess?
We are all caught up on questions. And I just wanted to remind folks to, if you're interested in getting the 1 hour credit for this, just submit a response to this poll, whether it's relevant to you or not, please, because I'm preparing to close it.
Yeah, we'll give a few more seconds. That's all the information I have for today, and I'm a little bit over on time, but Susan, is there anything that you wanted to add before we close out?
No, I don't think so. Well, one thing, we will be putting a link to the rates dashboard on our asset management website, so you can look for it there as well.
Thank you so much, Susan, and thank you everybody for your attention and for being on. I'm going to pass it over to Tess to mention this feedback survey and to close things out. Thank you.
Great. Yep. Thanks, Shadi. I did place a link to our Google form in the chat. So if you're interested in giving us feedback, it's optional and anonymous. And I'll just say thanks, and thanks to Ohio EPA for letting us work with you on this, and thank you, Shadi. Have a great afternoon.